Hi, I'm Jeff Aronheim with CrossCountry Mortgage, and welcome to my YouTube channel. Today we're going to talk about the proper pre-approval process. And you want to know this before you start shopping for homes. It's critical. And make sure you stay till the end because we're going to provide some great information at the very end. But before we get started, please follow us on our social media. So a lot of people come to the lending process with getting pre-approved with a lot of fears. And I just want you to know it's understandable. People they just want to start shopping and they have no idea what they're even qualified for. There's a lot of fears about the lender saying no, and even fears about the lender taking advantage of it. And these are all normal feelings that people have. So I'm going to walk you through this process for how to pick the right lender and how to do the right process to get the right home for you. The reality is you should get fully pre-approved and know exactly what you qualify for and what you should shop for before you even start looking at homes. So I'm going to walk you through a 5-step process for getting pre-approved. Those 5 steps include deciding who to contact, having the right upfront conversation, filling out an application, having the loan consult, and going shopping. So deciding who to use for your lender. So first and foremost, there's a lot of different types of lenders out there, and I'm going to share 3 different categories. And I'm going to tell you there's no right or wrong. They're just different, and I'm going to help you understand the pros and cons. So when we look at lenders, there are banks that can do all kinds of things. They do banking, business banking, checking, savings, you name it. They're kind of a clearinghouse for everything. The banks will basically do loans in their name only. That's how they're set up. They have one option and just one rates that they have a choice of. It can also vary from the type of lender that they have there. They have private lenders that are highly seasoned, and they have some newer folks that might have just recently started. So it can be a little hit and miss with who you know. The second channel is what we call a broker channel. And this is a channel where someone just can easily set up a company. It doesn't take a lot. It's kind of a low overhead situation for maybe a single person, sole proprietor. And in that situation, they can be nimble. The challenge is they have to give their file to another company for them to underwrite it. So they lose control of the process. And then the third one is a direct lender or correspondent lender, which is how I'm set up. The way we're set up is we can shop all over the country, and you can choose whichever lender has the best rates. But then when it comes to actually processing the loan, we do everything in-house to get your loan approved. So pros and cons to each of them. I obviously like the one I'm at, which is why I chose to be there. You just have to choose what's best for you. Once you have that, you also want to know who are you going to talk to. And there's a number of ways you can find your lender. The best way, guys, is to ask for referrals. People you know, like, and trust who have used this person before. Maybe a realtor that you're working with, ask who they recommend because they see it all the time. That is the best way to get a recommendation. You can certainly go online, you can shop online and have that, but I'm telling you guys, the online lenders, it's hit and miss with who you're going to have. They're going to quote a lot of rates that can look good, but once you get in and they get you to start to fill out information, things may change. So there's nothing wrong with doing the online lending. You just have to really do your due diligence and vet them out. And the third question is, how many do you interview? And I would say 2 to 3 is a really good number. 1's probably not enough. 2 to 3 is a good number. If you start going beyond that, 3, 4, like 4, 5, 6, you're just creating a lot of work. And what you're going to find is most lenders have very similar products and rates and terms. What you're really going to decide on is the people in their process. So the second thing you want to do is have a great upfront conversation with the lender before you start giving them all your information. And this is important because you're going to have to provide a lot of information to them, from your date of birth, your social security number, your address history, your work history, your income. There's a lot of information that you're going to share. So I've got a few qualifying questions I recommend, and I'm going to give those to you now. So first and foremost, are they responsive? If you call them, they need to be calling you back same day, preferably within 30 minutes. You should hear back from them. The second thing is, are they easy to talk to? At the end of the day, you have to have a great conversation, a great communication with your lender and feel that you can understand what they're saying. So you just want to talk, feel like you understand the words they're telling you, understand how they're communicating, feel good about it. The third question to ask is, are you more of a sole proprietor or do you have a team model? And with the sole proprietor, that's a single loan officer that kind of does it all. They do their marketing, their admin, prospecting, they do their selling, they do the loans, they kind of do everything. And that's where a lot of people start. When you get to a team model, you're getting more of a team where people are specialized and the lender is really focused on taking care of the clients. I personally think it's great to have a team. I think that model works I just believe it delivers a higher level of service than one person can do. It's kind of like when you go to a fancy steakhouse, there's a whole team supporting you from the front waiter, back waiter, crummer dude, wine gal. They do that to deliver the best experience possible, and we feel the same with the team model. The next question to ask is, how many families have they helped in the year? And what you're looking for is someone who's doing enough reps that is clearly active in the business. And I would say they need to be doing, like, if they're doing 100 or more transactions a year, this is someone who is active in the space, is operating at a high level, and someone that you can absolutely know is doing this on a regular basis. On the other hand, if they do a handful a year, a dozen a year, they may not be on top of all of the guideline changes that are occurring in current events because they're just not in that rhythm. And then the final question to ask is, what's their process? How are they going to walk you through the pre-approval process? And I'm going to tell you, there's a lot of differences from lender to lender. I've seen some lenders where all they do is take information over the phone, check your credit, and then say you're good to go, and they never meet them. That is not the right pre-approval process. The right approval process is what we're going to walk you through, and which we're going to cover next. So once you talk to the lender and you decide, okay, this is someone I feel pretty comfortable with, I'm willing to provide my information, the next step is to fill out the loan application. You can do it a variety of ways. You can fill out an online application, which most people these days like to do. You can have them take it over the phone, but what we're going to collect is we're going to cover a 2-year work history, a 2-year living history, your name, social security, date of birth, and there's a lot of other qualifying questions about your income and assets. That can take about 15 minutes to fill out, whether it's on the phone or in person or online. Then from there, they're going to go ahead and do a credit check. Now, some lenders will check credit, what we call a hard credit check, and some lenders will do a soft credit check. They both deliver the same information to the lender, but a hard credit check will be reported on your credit, and it's going to notify basically TransUnion, Experian, and Equifax. The credit bureaus will actually use that information to notify anyone who wants to buy leads from them, and you'll start getting blown up by all kinds of other lenders. So I do recommend you find a lender that has the capability to do a soft credit check to start so you don't get blown up. And then there's also a process that you can go through to opt out of receiving what we call those trigger-based solicitations. After they check your credit, they're then going to tell you what documents to upload. Typical documents would be bank statements, pay stubs, W-2s, tax returns, and there's a variety more others depending on the type of income that you receive. Some people own multiple companies and have individual tax returns. Some people get pensions or Social Security award benefits. All of these different incomes have different documentation requirements. So this is where it gets very specific when they ask for the paperwork from you. Now, once you've provided all the paperwork, then the lender or their team member, whoever they have set up, is going to review all of the paperwork. They're going to review the credit report. They're going to calculate the income based upon all the documents that you provided. And there's about 30 different types of income. So there's a lot of ways to calculate income. They're going to look over your assets, and they're going to make sure that your file matches the documents that you provided. And then at that point, you schedule a consult with the lender to go over everything. So during the loan consultation, you should be meeting with the lender. This is the person that's licensed, and this consult is a critical piece to the pre-approval because you're going to walk away with the plan. You're also going to walk away with determining, do I like this person, and am I good with them, or do I need to look for someone else? So a great pre-approval process is about a 45-minute to an hour consult, face-to-face or on Zoom, and they're going to cover 4 key areas is what I recommend. I think it's important to cover a little about the team, so they know who we are and how we're going to take care of you. They're going to go over the process so you know exactly how it feels like. Like imagine getting surgery on your back. And after surgery, wouldn't you want to know how it's going to feel? Like how long is this recovery? What's it going to feel like? How much pain am I going to be in? It's kind of like that with the loan process. Like setting expectations is extremely important. So they're going to go over that loan process as well and make sure you're clear about that. What's critical is get into a goal-setting conversation. And we say goal setting, we want to talk to people and understand what's your story? What are you trying to accomplish? Why are you trying to do this? What are your goals? What are your long-term goals? And then getting a little deeper, looking into, they should be asking you about, hey, what monthly payment are you comfortable with? How much money are you comfortable bringing for the down payment? How long do you plan to live in the home? And what the lender should be doing is designing a loan which is based on kind of what we call 3 levers. They're really looking at interest rates, monthly payment, and cash to close. Most people come thinking interest rate's the most important thing, but if you have a good lender, they're going to dig a little deeper, and I see about 90% of the time it tends to be monthly payment or cash to close that actually drives it, because the rates tend to be the rates. After the goal setting exercise, a lender should walk you through your pre-approval. They should tell you what is your credit score. They should let you know what they're calculating for income, verify the assets. They should tell you, hey, this is about how much you're qualified for, and verify everything. They should let you know what your max qualifying amount is, and then more importantly, based on the goal setting, what is the correct purchase price based upon your comfort level? Because a lot of times people may be qualified up to here, but you want to purchase where your comfort level, and sometimes that's down here. After they walk through the pre-approval, then it's time to look at the numbers. And there should be a number of scenarios we look at. There are different purchase prices we should look at. There are different down payment amounts. The lender should be teaching you about the different break points, we call it, when you go from 5% down to 10, to 20, to 25, 30, and 40. Those all result in different rates. Other things that drive rates can be the credit score, in addition to the down payment, and even the property type. So you should walk away really understanding what are the key drivers for the rates that you're going to get, so that you can make your own decision on, do I want to put a little more down in this case, or am I okay putting less down? The lender's job really is to educate you so that you understand the options and can make great decisions for you. In addition to that, they should walk you through all of the fees. I have a separate YouTube video for walking through a loan estimate, which is that fee sheet, but they should show you all of the numbers and the fees, what can change, what won't change, depending on the home that you buy. You should have a broad overview, so you should know how much money am I going to have to budget, not only for the down payment, but also for the closing cost and what we call prepaid items as well. By the time you walk out of that consult, you should have a really good handle on, number one, is this a lender I feel comfortable with after meeting them? You should know exactly what price point you should be looking for and how much money you're putting down, so that you can then go to the realtor and have them look for the right priced homes. So once you have all that information, it's now time to go shopping. So if you want to know a little bit more, we have some links down below for you to schedule some time with me, or some more information that you can access. Please remember to follow us. And I'm Jeff Aronheim with CrossCountry Mortgage.